Keki, welcome. Very good to have you here. You've been with HDFC for almost 40 years. Industry briefly before that. To learn how to house 1.3 billion people, close to 1.4 now, is a lesson the world obviously will need to learn as it adds 2 billion more people by 2050. But alongside the enormous challenges that the world faces almost across every country that already exist in finding good housing for people. I know you've also worked with development agencies too to assess how they could do that more effectively in some parts of the world. HDFC is the largest housing finance company in India today. Could you give us a brief background as to how that came about and the philosophy behind achieving that, the culture, the long-term approach, the sustainability impact, and so on?
All right. First of all, thank you very much for having me here on your show. HDFC was established in 1977 as India's first retail housing finance company. And till that time, retail mortgage finance in India was completely unknown. There was considerable skepticism at the initial years surrounding HDFC's formation, as firstly, no one had endeavored to provide retail finance to individuals in India before. Secondly, at that time, there was no access to long-term funding in India. And thirdly, there were no foreclosure laws that existed. During those days, banks did not provide housing loans, and there were no specialized lending agencies for housing. Customers had to resort to borrowing from local money lenders who would charge you exorbitant interest rates. There was also a strong case to establish a mortgage finance company because the housing shortage in India in those days was immense. Our aim was to build a housing ecosystem that was sustainable and importantly, making it possible for the common man to fulfill his or her dream of owning their own home. For the first 10 years of our existence, we were virtually a monopoly. But we realized that given the acute shortage of housing in the country, it was important to have more players in the housing finance business. We felt that since we were the first movers, it was our social obligation to fulfill this very critical need for housing and to increase home ownership in the country. Today, the housing finance market in India is quite competitive between banks and dedicated housing finance companies. But in our early days, we were probably amongst a rare set of institutions that actually created competition for ourselves. HDFC helped set up 4 other housing finance companies, including India's first rural housing finance company. Institution building for the housing system was equally important. HDFC assisted the government to set up the National Housing Bank as the housing finance regulator. The first rating agency in India was also co-promoted by HDFC, as was the first credit bureau in India. Hence, building the right ecosystem is core to HDFC's philosophy. Ever since the liberalization of the Indian economy in 1991-92, the HDFC Group has emerged as a strong financial conglomerate in the Indian capital markets with a presence in banking, life insurance, general insurance, asset management, venture capital, and education financing. Listed companies within the HDFC Group have a combined market capitalization of over US $215 billion. As regards your question on nurturing a culture of ethics and sustainability, we knew from the very beginning that customer service was going to be our key focus area. In our early days, borrowing was a very uncommon practice and customers were extremely shy to approach us for a loan. We had to ensure that customers felt comfortable when talking to us. Our staff had to make sure that customers overcame their initial resistance. We realized that HDFC had to be a customer-centric organization. In fact, customer needs define all our processes, even the design and layout of our offices. We recognized that the purchase of a house was the single largest investment that a middle-class person would make in his or her lifetime. Hence, value-added services became extremely critical. To attain the highest level of ethics across the board, we invested a lot of time and resources in training our staff. Every single employee of HDFC, irrespective of his or her rank, has to go through at least one training program annually, and customer service is a key subject of discussion in these programs. One of our main objectives is to maintain the highest possible standards of ethics, integrity, and governance. We have lived by the principle that we should never do anything that would cause us the slightest degree of embarrassment. And there is absolutely no compromise on ethics. As our chairman used to say, there is no pillow as soft as a clear conscience.
Very nice. Very good to hear that. I've obviously interacted with your team over many, many years, and I know your commitment to housing and affordable housing in particular, and this being such a big issue for the UN Sustainable Goals. Your lessons and the lessons you provide are very important, and I very much appreciate the ecosystem approach that you described. From your perspective, from HDFC's perspective, how do you view housing finance as playing a meaningful role towards meeting the UN's SDG goals?
All right, so as I mentioned earlier, our key objective is to increase home ownership in the country. I'd like to point out that housing encompasses financial inclusion and provides stability and security to a household. Housing is also a good indicator of a country's sustainability. Housing is a basic necessity and not a luxury. Most middle-income people who take loans to buy a house are genuine end users and intend to stay in the house which they purchase. We believe that our core business meets a critical social objective, and it has always been our endeavor to ensure that we provide housing finance solutions across all income categories, be it the economically weaker section, the lower income group, the middle income group, or the upper income group. If one looks at the last financial year, 16% in value terms and 33% in volume terms were loans given to economically weaker sections and lower income groups in India. The average size of these loans would be in the range of about 15,000 to about 26,000 US dollars. And this compares with HDFC's all India average loan size across all income segments, which currently stands at around US dollars 42,000. A meaningful move towards SDGs also entails partnering and supporting the government's mission through its flagship program called Housing for All. And one of the key components of this is the credit-linked subsidy scheme. This is a scheme that the government initiated for first-time home buyers, where the government pays an interest subsidy to the beneficiary upfront, thereby giving a helping hand to low and middle-income households to get a house. The government's trust on housing is a recognition that a rapidly growing country like India, with a large young population, needs more homes at affordable price points, which would enable more households to become homeowners. We have been the only institution to have crossed the 250,000 mark, and we have the largest number of beneficiaries under the credit-linked subsidy scheme. At HDFC, we look at inclusivity beyond income levels. Out of the total housing loans dispersed in financial year 2021, 48% were to first-time home buyers. Of the housing loans dispersed in that year, in the same year, 70% in value terms had women as owners of the property. These loans ensure women's property rights and that these are recognized and protected as their names are registered on their respective properties. Through our rural housing portfolio, loans are given to farmers, agriculturists, planters, and horticulturists. Our niche housing project, HDFC Reach, addresses the housing needs of those in the informal sector. Our focus is also on identifying deep geographies and micro markets to expand our reach to customers. Thanks to technology, we can expand our geographic footprint in a significantly more cost-efficient manner. Housing finance also meets the crucial sustainable goal of job creation. Housing is one of the largest employment generators in the economy, whether it is in terms of direct jobs and the indirect jobs that it creates in ancillary industries like cement, steel, power, etc. One of India's biggest needs is job creation. This, I feel, is one of our big challenges. It is estimated that we need to create something like 10 million jobs every year till 2030 to reduce the unemployment. The creation of new jobs currently is lower than the estimated level, and housing and construction is one of the sectors which will facilitate more and more and higher job creation.
Interesting, Keki. And again, I think you've hinted at and really explained how the whole system needs to change to support meaningful employment, the building of houses, the financial inclusion, and so on. And as we did our study, Capital as a Force for Good, what we noticed was financial institutions, the largest financial institutions around the world, are very much focused today on climate change. and that's no surprise given COP26 is coming up. That has had a side effect, though, which is that capital allocated to human needs has been much lower than people would have wanted it to be at this stage. Clearly, climate needs more initiative and more funding, but also people and their needs also need a huge amount of funding. You seem to have done that the other way around. You've had a big focus on people. How is your institution approaching climate change?
Right. So for us at HDFC, while we recognize the growing risks around climate change, we are also seeing opportunities. Admittedly, a lot of the initiatives may not have an immediate impact on the lending portfolio, but we are laying the foundation for future growth. For instance, we are keen to increase our footprint in funding affordable, smart, and green housing. We estimate that less than 5% of buildings in India are green, but this is bound to change rapidly. At HDFC last year, we signed an MOU with the Indian Green Building Council to promote and encourage developers to opt for green buildings in India. We have certain pools of funding, mainly from multilateral agencies that are specifically earmarked for lending towards affordable and green housing. These loans entail enhanced environmental and social due diligence. For instance, for loans given to developers, there is increased monitoring on aspects like pollution prevention, water permits, reporting on fatalities or injuries, labor codes, creche facilities, resettlements, etc., etc. Environmental and social risks framework has been put in place for various components of the lending portfolio. We recently launched green deposits for retail depositors. The funds raised under this product will be deployed entirely towards green and other sustainability initiatives. Around 2/3 of our lease rental discounting portfolio entail green buildings. These are typically grade A commercial properties and office space. We engage with developers to sensitize them on ENS best practices. On the other hand, we remain cognizant of the climate risk on the lending portfolio. For instance, when we look at our individual mortgage portfolio, risks could arise from rising sea levels, floods, and conversely, water scarcity. That is why we are encouraging all our borrowers to take insurance, both home loan insurance and as well as home insurance per se, which is insurance against fire, earthquake, floods, natural disasters, bushfire, landslides, etc. We are fortunate to have strong partners in our insurance ventures. Our non-life insurance partner, Ergo, which is a subsidiary of Munich Re, has deep expertise on catastrophe modeling and data on natural hazards assessment. Yet in India, financial modeling on climate risk is still at a very nascent stage. We understand that the central bank may soon provide some sort of regulatory direction to guide the Indian financial sector on climate-related financial disclosures. Here I would like to mention that HDFC published its first business responsibility and sustainability report this financial year on a voluntary basis, even though it was made mandatory by the capital markets regulator SEBI only for financial year 2023. This report also requires Indian companies to disclose what steps they are taking to address climate change. We are conscious of reducing our carbon footprint within HDFC. Some of the initiatives we have undertaken include recycling efforts, installing solar panels in some of our premises, removal of plastic bottles at all our offices, measuring the greenhouse gas emissions at select offices. Also, as part of our social initiative, interventions, we have supported flood rehabilitation and disaster relief efforts. For instance, there were disaster floods in the southern state of Kerala a few years ago. We participated in the rehabilitation of homes in 2 districts of Kerala. These families were not our customers, but we undertook this project with the help of local building experts and involved our branch staff in rebuilding these homes.
Very interesting. Keki, we're coming to the end of this time with you in this tight schedule, but let me ask you a very important question. You have pointed to a multi-stakeholder system that needs to be involved, which includes the government and the regulator, other people in the value chain that are not financiers like builders and so on, to deliver something which is a good product, which is green and sustainable and affordable, and in a size which is probably quite surprising to many people in the world in terms of how small the loan is too. If we're transferring lessons to the rest of the world, what is your perspective, your ideas on what the world needs to do to make a radical difference to raising the level of the world's people and planetary sustainability?
So the pandemic that we've been going through in the last 17, 18 months has certainly widened inequalities, which lies at the core of any sustainability objective. At HDFC, since inception, we have always believed in the importance of helping build a property-owning democracy. The pandemic showed that there can be no greater security than a home. We also know that people who have homes feel like they have a stake in society and tend to be healthier and better educated as well. In India, though the demand for housing remains immense, the mortgage to GDP ratio is still very low at less than 11% of GDP compared to something like 20 to 30% across various large Asian economies. And this ratio is even higher if you were to look at the Western world, where the ratio could be between 60 and 90%. So long-term sustainability for us at HDFC would be to work towards increasing India's mortgage to GDP ratio so as to enable more Indians to become homeowners. The growth of any economy is closely linked to the housing sector. World over, this sector is considered as a significant catalyst to the growth and sustainable development of an economy. Access to decent, affordable housing is so fundamental to the health and well-being of people and the smooth functioning of an economy. Globally, one of the most critical factors is housing affordability. And fortunately, in India today, with stable property prices, very low interest rates, fiscal incentives on home loans, and rising income levels, housing affordability in the country has never ever been as good as it is right now. As per our estimates, this is arguably the best period in terms of affordability in over 2.5 decades. The pandemic has been one of the most scaring periods in living memory. Yet we at HDFC look forward with optimism that home ownership will increase in the country. And certainly the global sustainability agenda will need large amounts of capital and intergovernmental collaboration on a scale that we have never seen before.
Very much appreciated, Keki. Thank you very much for sharing those insights about the journey of HDFC.
Thank you for having me on your show.